What's going on, ladies and gentlemen? Welcome back to another live stream. Let me get this gum out of the way. So we had done this live stream a few weeks ago, maybe it was last week or so, where I was talking about all the things that I kind of went through as a trader, how I got started, some things on taxes, some tips for beginners, and there was some personal information in the video that I didn't want out to the public, so I had to take that down. And this is going to be me recapping and redoing that same live stream we did a few weeks back, right? So this is the time where it's going to be good for you guys to ask questions about me, get to know me more personal, and ask any questions you guys might have in regards to just starting out trading. Anything that's not too complex that we can't take too much time on, of course. So today we're going to go straight into it. First thing we're really going to cover is how it was that I got started. That's a big question that many people have for me. So that's what we're going to do. I'm going to wait just a few minutes here. We're going to wait for some more people to come into the stream, and then we're going to get started and rocking and rolling. So anywho, NASDAQ SE, good to see you here, guys. So for those of you watching, how did your trading day go today so far? We're going to wait for some more people to come strolling in, but I'd like to see how everybody's trading day went so far today. Nice, Mr. Paul there. I'm glad you like it. Yeah, we do try pretty hard to make sure everyone's pretty happy in our group. That's definitely an important thing for us. All right, so I do not rely on StockTwits to pick the movers. To be completely honest, I have never, I don't want to say never, but if I had to honestly say, I think I've been on StockTwits maybe once or twice in the entirety of my trading career. I do not use StockTwits. I stay as far away from that as I can. There are good traders on StockTwits, and there is reliable information, of course, but for me, I do not use StockTwits at all. Okay, so didn't take a position. That's okay. Red because the rule couldn't sell. Edgar, I will talk about that. I will talk about the PDT rule too. That's a very important topic that we're going to talk about today now too. I'm glad you brought that up. All right, so David, to be completely honest, right? So what I would use to track trades is TraderView, and to be completely honest, I haven't used them a lot recently. I was meaning to upgrade an account with them, and then I never went forward with them and kind of stopped using them. But if you want to track trades, a really great approach is going to be using TraderView.com. In the future, for traders, when you get to that point where you're starting to trade a lot more, you will have to pay for the paid subscription to TraderView, which I think is like 20 or 30 bucks. But as far as, using the free service does do a wonderful job at tracking trades for you. I think you can have up to like 100 trades a month. So if you trade more than 100 times, you won't be able to upload, any of your trades that, break the 100th trade. You'll have to pay for the upgraded subscription on their end. Okay, quick question here. What is the difference between swing trading and day trading? All right. So day trading is when we will come in and take a position. So for example, let's say I bought Apple today. A day trade is buying Apple today and selling Apple today. A swing trade would be buying Apple today, selling it tomorrow, or in 2 weeks from now, or 3 months from now, or maybe 5 or 6 months from now. So a day trade is a trade in which you get into a stock and you get out of that stock within the same trading day. And a swing trade is when you open a position and you hold it for a couple days. That is a swing trade. Okay. What's going on, Edgar? Trading View. It's Trader View. If I said Trading View, I meant to say it's Trader View, not Trading View, in terms of tracking your trades. Let's see. How to swing a short squeeze. So how to swing a short squeeze. So, I mean, that's a pretty in-depth question, but what I can say is that most short squeezes don't really last more than like a day or two. Usually a short squeeze only lasts a day, and then it kind of stops. So there's multiple ways to understand a short squeeze and how you can capitalize on a short squeeze, which can be done in a later video. We don't quite have the time to touch on that because that is a very complex question that has a lot of ins, outs, whys, why nots, and things like that to actually understand when short squeezes are taking place. Edgar Lopez's question here is, what time frame do I use to trade? I primarily trade a 1 minute time frame, and occasionally, and when I say occasionally, I mean I periodically will check a 5 minute chart throughout the day on the stock that I'm trading. So to put it basic, I trade on a 1 minute time frame, and occasionally during the day I will check the 5 minute time frame on that particular stock that I'm focusing on trading to kind of confirm my thesis on trades before I take them. But I primarily use a 1 minute chart. Best broker for beginners. All right, here is the way I look at it. If you are just starting to trade stocks, your best bet is going to be using Robinhood as your broker. That way you don't pay commissions and you can get the feel and understand what it is like to use a trading broker that doesn't pay, or you don't have to pay commissions for. So in the way I say is the best broker for a beginner to start with will be something like Robinhood, just so you can get the feel for what it's like to open a position, close a position, win some money, and lose some money. If you're talking in terms of what's the best broker for beginners to use when day trading, it will not be Robinhood, okay? There is no best broker for a beginner in terms of really day trading. Robinhood is only going to be good for a beginner in terms of using it to start trading and getting your feet wet. But in terms of day trading, Robinhood is not going to be a good broker to use. Robinhood works good in the sense of swing trading, long-term positions, or buying a stock and holding it throughout the day. Because if you're going to do momentum trading or fast-paced day trading like myself or many other day traders, you'll have a very challenging time getting in and out of your positions with the lag and the delay that Robinhood has to get in and out efficiently in a fast-paced environment. So in terms of day trading, fast-paced momentum, not a good choice to trade with Robinhood. Robinhood will be your best bet for someone who's just starting trading, wants to get their feet wet, is looking to do some swing trading and long-term investing and things around that aspect of trading. Okay. All right. Taking your advice and being cautious with stop loss in case things start crashing. Also taking money off the table, as you said, and many thanks. No problem. What's considered a bad habit when trading? So the number one worst thing that you can do in trading that can result, bad habit. So one of the worst things that you could do in terms of trading is holding the bag, right? And there's different scenarios when holding through the pain makes sense, and there's different cases when holding through the pain is probably the worst thing you can do, okay? So you never want to be someone who buys a stock, has it turn against them immediately, and then hold it hoping that it will come back in your favor. That is the number one mistake you should know not to make, is buying a stock and holding it and waiting for it to turn around. That is the number one mistake. Second biggest mistake you can make as a trader, not an investor or a swing trader, but as an active day trader, is over trading. Over trading will kill you. First off, you will spend a lot of money in commission. Second off, the more trades you take, the less accurate you tend to become. And there's a couple reasons why, and I'll touch on that in a second. But over trading looks like this. You take one trade, you take two trades, you take three trades, four trades. Now you're on 15, 16, 17, 20 trades. That's a lot of trading. The only people that should ever be really making 20 trades in a day should be an experienced trader who is maybe doing some scalp trading. The only time I'd ever say that it's okay to trade upwards of 15, 16, or even 20 times in a day is if you are just nailing trades left and right and the market is fire hot and there are trades all over the place. That is a time where you could justify taking that many trades. But on the typical average day, a day trader should be taking, anywhere from maybe 2 to 7 trades, right? And that right basically from the 1 to 10 trades is kind of your median, right? So even some people will consider 10 trades kind of over trading. But let me put into perspective this way. What if you took 5 trades in the beginning of the day And, some were winners and some were losers, but nothing was really working out in your favor. It was just kind of chopping you back and forth. But you're basically break even on the day, or a little green or just a little red. All it takes is one more trade in that manner to put yourself green, right? So in terms of over trading, it's coming down to also understanding yourself as a trader, the individual themselves, to better accommodate and understand how you trade. But typical, you should be taking anywhere from like 3 to 5, maybe 10 trades a day. Some days I'll take 10 trades. Just kind of depends on how the feel is. Like yesterday I only took 3 trades. Today I think I took probably 10 or 11, maybe even 12 trades. I had a really rough day trading today, and we'll talk about that in a little bit too. All right, so touching back to why over trading is a very bad thing, especially for newer traders, is this. The best time to trade as a day trader in the market is going to be from bell open at 9:30 a.m. Eastern Standard Time to about 10:30 to 11 Eastern Standard Time. After 10:30, 11, the volume will slow down and the moves will become less. There will be less follow through with the stocks and their moves. So what happens is, right, put yourself in the perspective of you're a trader, right, and you're over trading. So if you're over trading, chances are you're going to be trading into the 11, 11:30, 12 p.m., 1 p.m. time frame of the day, and that's when things slow down. So now not only are you over trading, but you're taking trades in a time frame that you shouldn't even be trading in. So not only you're over trading, the over trading results into you trading longer. The longer you're in the market, the more risk you take on, right? It's like jumping around a fire, right? The longer you jump in a circle around the fire, the likelier you are to get burned, right? The longer you dance around a puddle, the more likely it will become that you're going to get wet, right? So that's the way you look at it, okay? Let's see. Kind of just going over some things here, reading some comments. Let's see. So Marvis, our subscription does not give you full access to Trade Idea Scanner, so you can't actually use the software, but we stream our scanners, our custom-built scanners, so that you can use the different alerts that come through, and we help also kind of alert you of any new stocks that pop up on those scanners. So you don't actually get to use the software, but you do get to get the same type of alerts that would be coming through to us on those scanners, right? So, George, to talk about earnings reports. So, when it comes to earnings reports as a trader, it's basically irrelevant to actually do a full fundamental analysis on like all their earnings, because at the end of the day, as a trader, you don't really care, what the end game is for the company. You just want to trade their volatility, right? So we don't, and since we're a trading group, we don't teach, all the aspects of an earnings report. And secondly, even if companies have good earnings, we've seen companies rock earnings reports and still have a poor trading day after their earnings, right? So earnings reports, whether good or bad, don't always determine or don't always mean that they're going to have a great day on great earnings or they're going to have a bad day on bad earnings. There's a lot of behind the scenes action that takes place when it comes to hedge funds, traders, institutional traders, long-term investors, and how they want to trade a stock, how they're trying to size out a position. So there's a lot that goes into it. So we don't actually touch into fully like looking at earnings, but we do kind of give you the gist of, when you're trading with us, that the guidance has been lowered, the earnings or revenue was a beat, earnings were down. So to give you a quick perspective, if you're looking at an earnings report for whatever, maybe it's Apple or Facebook, right? If they come out and say on their earnings report that our revenue's up but our earnings are down, right? But we have we're decreasing guidance, right? What that tells me is when a company's revenue's up but earnings are down, chances are they had good sales to bring in the revenue, so the revenue may be up, but the earnings could be down because they spent more money on expenses, right? So maybe they had hired another 1,000 employees, and now they have a lot more money to pay out this quarter to new employees. Maybe they're expanding business and opening up more offices in different states, right? That could take away from their earnings. So though revenue is good, earnings can still be down due to the amount of money that they are spending on possible expansion, new employees, new products, research and development. So there's a lot that goes into earnings, but as a trader, you don't really necessarily need to know that. You need to have a good idea of what the earnings are looking like and then play the volatility and momentum that is favoring that direction for the day. Okay. What's the difference between profitable and professional? Well, a professional trader, anybody who's a professional, has typically done that type of work for 10,000 hours plus. So you could kind of consider yourself a professional trader once you've been doing a particular, like a sport or a hobby per se for over 10,000 hours. Okay, that's kind of what puts you into the professional state. They calculate that it takes about 10,000 hours of practice doing one thing to become so efficient at it that you become a professional. So the rule of thumb is 10,000 hours in any given thing. You should learn enough and become experienced enough to consider yourself a professional. But in terms of what you're asking, profitability to professional, profitability doesn't necessarily mean you're a professional, right? When you become a professional, it's more than just profitability. It's knowing that even though I'm up 1,000 on a day, I should probably call it here, right? Being a professional is just a well-rounded understanding of what's going on to the point where you can make very good educated trading decisions. You know when to cut yourself off. You have the self-discipline. You know the risk management. You basically know the ins and outs of all trading, the possible scenarios that could take place if the trade goes against you, okay? But most people, when they reach profitability, consistency, at that point, they have become very experienced and they're probably on their way, if not already a professional trader at that point. Okay. Let's see. How do you select the stocks you trade every day? Do you swing trade? If you do, how do you pick the stocks? So I do not do a whole lot of swing trading. I can, but I don't for the most part. Just because I'm just so active in day trading and I have so many things on my plate. I will put this swing trade. I can do swing trading. It's just swing trading takes a little bit more analyzing for me per se. And I just am caught up with so many things throughout the day that it's just not that, it's not to a point where I'm too crazy about swing trading that I'm going to go out and put the extra time in, right? So to understand me on the backside, right, I run a YouTube channel. I run a business on the side. I run a whole chat room. I run a Facebook group. I run a personal Facebook. I have my own Twitter. I have a bunch of social media accounts. I consistently upload YouTube videos. As you guys see, I do one every single day, and then I upload another one every single day. And then there's back-end work, customer service things, emails. So my day-to-day routine is very busy. So to add something like that onto my plate, it really, for me, needs to make sense. And at this point, it doesn't make a whole lot of sense for me to really delve into adding another thing to my plate. But in regards to the second part of your question, which is how do you find the stocks you want to trade? I will give you a list. This is primarily how I find stocks to trade. Stocks that are gapping up in the morning pre-market, stocks that are gapping down in the morning pre-market. Earnings reports that are coming up, and that's about it right there. There's like literally 3 steps. Stocks gapping up and down in the morning and earnings reports. Right there you could trade and you can find all the stocks you want to trade. I will tell you this, the more complicated or harder time frame of trading is when we go into a slow period, this in-between period of earnings plays. Once earnings season stops, there will be less stocks gapping up and down. So once earnings calms down and we don't have stocks that are flying on the radar every day, then it comes down to really following stocks and understanding where they're at currently on their chart. Are they at all-time highs near resistance? Are they at big lows near supports? Are they at key level points where we could see a pivotal change in the stock? So once you don't have just easy stocks gapping up and down, now it comes down to actually analyzing a stock and understanding where it is currently at. Is it near strong support? Is it near big resistance? Pivotal moments in the stock, right? So really what you're looking for is, do you scan based on this much volume, that much volume? No, I can tell you mainly I find my stocks from pre-market scanners gapping up or down. earnings plays, and then I also have reversal scanners, parabolic scanners, momentum scanners, that if there's something moving in the market that I didn't foresee or didn't already have on my watch list, then my scanners will notify me and I can take a look at the stock and, at that point, decide whether or not it's something I want to trade or pass on. All right, let's see. I will go through a few more questions and then I will get to what I was referring to. Oh, we're getting a little laggy. Sorry about that. Wait, hold on one second. What percent of my account do I use to take on a trade? So let me start by saying the rule of thumb when a trader, you're only really supposed to use like 20-25% of your capital per trade, right? That's what you're supposed to be using, is 20 to 25% of your capital on any given trade, right? I can tell you right now, sometimes I will use nearly everything of my capital. On a lot of trades, I'll take 100% of my capital into a trade. Now, some are going to go, well, why would you do that? Well, the reason I am comfortable and can take 100% of my capital on any given trade is because that isn't all of my capital. I have money saved away that if I lose, I could just put it right back into my account. But in terms of someone who has an account, doesn't have money on the side, can't put money back in, you're supposed to, theoretically, rule of thumb, only use about 25% of your capital, because that is supposedly all the money you have to trade with. Whereas for me, all the money in my account is not all the money I have to trade with. I have plenty of money stored away and saved away in multiple accounts that if for whatever reason I needed to put money into my account, I can do so, right? The reason, and here's another thing I'll tell you, I typically keep my, well, I don't want to say typically, I keep my starting account balance on my stock trading account at $30,000. And then I trade for the whole month and I let it grow. And whatever I come out with at the end of the month, profit-wise, I take out and set my account balance back to $30,000. I could keep growing my account and have, $100,000 or $200,000 of my own capital in there. But the thing is, if you have that much capital in there, there might be a day and time where you think it's a really good idea to hit it even harder and buy a lot more shares, and then you could result in a big loss. Whereas if I keep my account around this 30 grand mark, reset it every month, I have become very comfortable at that particular capital level with how much money I can trade with and what I can expect to win or lose based on the amount of shares I'm taking. So for every month, I'm always starting in the $30,000 range. I know how many shares I can afford. I know what kind of win I'll be looking at. I know what kind of loss I'll be looking at. But if I were to up that to $100,000 and then I start trading with maybe $150,000, $60,000, or $170,000, depending on the price of the stock I'm trading, I have now entered into this game of not knowing what it's going to be like if the trade does go in my favor or if it goes against me, because I'm not used to that capital. When I become to the point where I want to up my capital, I will. But for me, I'm completely comfortable with having around a $30,000 account with the amount of shares I can take, and that's just come through practice and experience. All right. Moving on to the next question. How can you learn breakout patterns like bull flags, or how I seen in some of your videos like ABC pattern? What other patterns is there? Edgar, there are thousands of patterns, or there's so many different patterns. How do you learn them? Experience, practice. I mean, there's no like, oh, if it does this and it goes right here, then it's the perfect setup, right? It just comes down to practice. So the best thing that you can do is just keep studying away at patterns. Okay, so now that we've answered, so you guys can hold off on questions for just a second because I don't want the feed to get too filled up. I'm going to talk to you guys about now how I first started trading, all right, how I got into it. And we'll make it quick because some of this you guys may have already heard before. So how did I actually get into trading? It first started when I was 18 years old, and my dad taught me the rule of 72. The rule of 72 is an investment rule that is used to help you project a rough estimate of how much money you should have for retirement based on a few key factors. We won't touch on the rule of 72 today, but the rule of 72, my dad explaining me the importance of investing and saving for retirement, is what sparked my interest into investments in the stock market. So since 18, I had my first retirement account open, and I maxed out my retirement account as much as I could every single year, and I still do. Then when I turned about 19 to 20, that's where I started, really getting into actual trading, learning it, practicing. While this time period when I was learning and practicing, I was working a full-time job. At my full-time job, I worked full-time. What I ended up doing was talking to my boss and told him, hey, this is what I'm doing. He was cool with it. So he was able to give me 2 days off in the week, back to back, Monday and Tuesday. So I ended up having Monday, Tuesdays off so I could get full experience in the market. Then I asked him if I could come in late on, I believe it was Thursdays and Fridays, so I could still see market open on Thursdays and Fridays. And then I told him I would work the weekend shift and stay late on the weekends to accommodate for the 2 days off in the week, and then the extra time off in the morning on Thursdays and Fridays. And that's what allowed me to really learn the market as I took that next step and said, hey, to my boss, can I do this? Can we do this? And he was okay with it because I was making up the shifts on the weekend. So I bit the bullet there, to voluntarily work weekends when all my friends were going out and partying. Not to say I didn't get out and party, but I had to go out and party later than they did. And then I had to wake up with a killer hangover and do it all the next day on the weekend. So sometimes there's some sacrifices and wiggling around in your schedule you'll have to do to accommodate moving forward with the trading career. Okay. So anyways, I started trading, getting really good at it. And then I eventually left working full-time, saved up enough money to start trading. Of course, I had wins, I had losses. When I left my full-time job, I started working a part-time job because at this point I wasn't fully consistent. I could make money but couldn't fully guarantee myself 100% wins all the time. So I still worked a part-time job just to bring in some extra money. And then it would be at about 21, 22, where I became I would say super consistent, but very consistent, full understanding of the market. And now I'm 25, and as you guys can see, I'm now on a 15-day green streak. And as many of you know as traders, 15 days green, day trading is an extremely hard task to do. To even have a couple days green without red is extremely hard to do. So being a trader, actively doing it every day and putting yourself in a market full of risk to come out on top is very challenging to do. And so I will say I'm proud of myself for that. But again, now I'm 25, been through all the ups, the downs, and it's to the point where, I've probably am well over 10,000 hours in this business. I mean, if you think about it, right? Every single day I do a pre-market live stream, right? That pre-market live stream is 30 minutes. So I have 30 minutes of practice every day. I start our private trading group at 7:30 in the morning, give or take a few minutes, depending on if I'm late on the day. But we naturally start our private group at 7:30 in the morning. So I start at 7:30 in the morning and actively go to about 11. So right there is about another 5 to 4.5 hours every single day. And then you have what I do at home. So for me, I'm well above 10,000 hours of practice in this business, right? So for me, trading all started, or the initiative all started when I learned about the Rule of 72, importance of investing, how to accumulate wealth, and then that led me right into the stock market. So that's kind of how my journey started to getting into trading. All right. 1 second here. All right, so that is generally how I got started. And then most people ask how long did it take before you start to see profitability. Profitability came after about 2 years, 2 years of trading, really. And then, super consistency has been like the last 2 years, right? At this point, I'm like almost extremely consistent. I still have those days where things are choppy, right? We all have them, and there's no way around it. But it's going to take you a good chunk of time to really get to that level of trading where most of you would like to be at. And it's a long game. You have to be patient and don't force it. And I'm going to walk through some tips later in this video for your newer traders to really hone in on and take everything that I say, very important, and take it very serious, because what I'm going to tell you probably don't want to hear, just like you didn't want to hear your parents tell you not to do this or not to do this when you're younger. But when you look back now, you realize your parents were correct. And if you just would have listened to them, they would have been far better off. So I'm going to be your parent here for a little bit later in this video, telling you the things that you don't want to hear, but it's your best route to becoming a successful trader. All right. I'll muster through a few questions here. Give me a second. What are my favorite indicators? I basically use no indicators. The only things I really use are exponential moving averages and the volume weighted average price. I don't use the MACD. I don't use ATR, average true range. I don't use RSI. I mean, I can use other indicators. Sometimes I'll pop them on, but in terms of my trading in active trading days, I don't use anything but just looking at the chart. Time in sales, level 2, active trader, depth of market. So just all the natural tools I would use to actively trade. That's all I use. I don't use any other indicators. Sometimes I hold overnight, sell the next morning, but not very often. All right, so now let's move into tips for taxes. Okay, so here, before we move on, I will tell you I am not a certified accountant. I am not a CPA, but after doing this for a while, I do have some recommendations and tips that I can tell you guys. But at the end of the day, you will still need to see a certified accountant or a CPA to handle your taxes at the end of the year, unless you can do it well enough. But I can promise you right now, find yourself a really good tax man who really knows the ins and outs of the IRS and all the deductions that you can possibly get, because it's going to help you tremendously throughout this career. All right, so taxes. So let's first start off by, what do you do with your taxes? How does this all work, right? Here's the main question that I receive all the time. Connor, I'm trading. I don't know what to do with taxes. How do I do it? Do they send me a form? What's going to happen? Well, for most of you guys, or a lot of people that use Robinhood, Robinhood tracks all of your trades. They track your gains. They track your losses. Come tax season, Robinhood will probably send a push notification to your app, something in your email, and it will say, hey, you can download your 2018 tax form for your trading. That tax form will be what you give to your accountant. The form that tracks your trades, or your progress report, shall I say, for your trades, will provide you with whether it's a gain or a loss. Okay? So in terms of the paperwork and forms, those are all sent by your broker. That is mandatory for them to do. It's the same thing as you having an employer, right? If you work a 9-to-5 and you're a W-2 employee, your employer is going to be required to send, mail, or give to you your W-2 form come due tax season. That is their job, same as for all your stock trading broker. It is not up to you to go and fish for it. They will send you some type of notification, alert, email, something that says, hey, your 2018 tax form is ready. Okay, that's how that works. All right. So in terms of losses, this is how it works for losses. If you're trading and you acquired losses over the course of 2018, we'll say that you lost $10,000 in 2018, and we're talking in terms of day trading. Okay, so remember, this is in terms of day trading. So if you're a day trader, active trader, and you have accumulated losses for 2018, let's say it's $10,000. If you lost $10,000 in 2018, what's going to happen is you can get a deduction up to $3,000. So of that $10,000 you lost, you will be able to deduct $3,000 of it. Now, this is the part where I'm not entirely certain, because I always kind of forget this one a little bit. I'm pretty sure, but you'll have to double check with your accountant, but you're able to deduct up to $3,000 in losses. Now, I do not believe that $3,000 in losses is able to be deducted against your own personal income from your 9-to-5 job. That's something you'll have to check on. But as a trader, you are able to deduct $3,000 from your losses, right? So then you deduct $3,000 from $10,000, right? And now you're still down $7,000 for the year of 2018. So what happens to the other $7,000 in losses? That will roll over to 2019. So you'll be starting off the year 2019 $7,000 in the hole. All right. So if you're starting off 2019 with $7,000 in the hole, if you were to make $7,000 profit in 2019, you will come out to a zero-sum gain, or net gain of zero. Again, if you lost 10 grand in 2018, use the itemized or use the deduction of $3,000, you'll have $7,000 in losses rolled over to 2019. Since you now have $7,000 in losses in 2019, if you were to make $7,000 profit throughout 2019 on your trading, you will then wash out and you'll have a zero-sum gain or a net gain of 0. Therefore, you would not be required to pay any taxes on the $7,000 profit you made throughout 2019 because it's a wash. Okay. Next thing, big misconception with trading. When you are a day trader and you are making short-term gains, any of the money that you make will be taxed accordingly to the tax bracket you enter based on your income. If you make $100,000 profit trading stocks, you will be taxed within the tax bracket of $100,000. Okay? If you were to make $200,000 or $350,000 trading stocks in 1 year, you will therefore have entered into the tax bracket of a person who makes a $350,000 income. And if you're not aware, the IRS charges anybody who makes like $250,000 to like maybe $500,000. They charge 36%, almost close to 40% on taxes. So put it into perspective this way. If you made $250,000 trading stocks, you're going to have to pay the IRS 36% of all the income that you made on those short-term gains. Bullshit? I know, but it is what it is. Do you want to go to jail? No. So you pay your taxes. But just know that the government always has your back, and that's why they take a lot of your money, okay? So that's how taxes work. Those are your tips for taxes, okay? All right, now I'm going to go down some of the lists here, see what else we have going on here. Oh, let's see. Do you ever hold overnight? No. Where you and Ricky collaborate? That's another good thing. So yeah, when I first started trading, I did enter chat rooms and Facebook groups and things like that. That's another thing I will say as a new trader. It is important to involve yourself within a community of other traders as it will help speed up your learning process. But do understand, as a new trader entering into these chat rooms or Facebook groups, the reason you are entering is to pick up on the lingo and the terminology and see what other people have to say. But in no way, shape, or form are you supposed to enter these chat rooms and these Facebook groups expecting people to know exactly what they're talking about and to guide you 100% to the gates of heaven. Do not take any alerts and do not take any suggestions mentioned in Facebook groups or chat rooms unless the person you're receiving the information from is credible, okay? And the reason I say this is because it is always important and extremely important to do your own research on any stock or position you are considering taking so that you yourself understand the reward and, more importantly, you understand the risk. Okay? Someone in a chat room saying, hey, look at the stock, I think it's good for a buy, that means they think it's good for a buy for themselves, but it may not be a good buy for you. Okay, so make sure you do your research, but it is important to involve yourself into some type of trading community or Facebook group where you can collaborate, share ideas, and pick up on the lingo that shall help shorten your learning experience exponentially. All right, let's see. When you're in the middle of a trade with dojis, do they always tell you which way the stock is moving? So, doji candles, the ones that look like this, right? Doji candles are like a 50-50. Basically, when you see a doji candle, it means the traders don't know if they want it to go up and don't want it to go down. Doji candles are extremely important to pay attention to depending on where or how a stock has been performing. Doji candles can mean absolutely nothing in relation to the stock, depending on how the stock's been trading. And on the flip side, doji candles can be extremely helpful depending on how the stock has been performing or where it is currently at in its trading. Okay, that comes with experience. Yeah, you can call me Bobby Axelrod. It's good. So I will show you a short position I took today on Netflix. I think I made like $300 or something, 300 or 400 bucks. So I'm gonna flip the screen to answer Tesla's 3 question. Here he goes. If the stock breaks pre-market support, is it a short? If it breaks the resistance, is it therefore a long? What's the rule? Okay. So let me show you a trade here on Netflix I took today. All right, NFLX. All right, so I'll pull up this active trader. So I made actually I made $564. Okay, cool. So I made $564 on Netflix today, and it was by taking a short I was anticipating they was going to break pre-market. So I will show you my trade on it here. Give me just a second. Okay, let's go to here we go. All right, so here is my trade on Netflix. I'll zoom in. So I shorted 300 shares on, in 1 second, let me do something here. 1 second. I need to do something. Don't, just bear with me. All right, so here you can see I shorted Netflix today with 300 shares. My average was $347.96. So I basically shorted at $349 on the stock. All right, and then I covered 250 shares at $346. Okay, so I shorted at $348 and covered 250 shares at $346. So I had a full $2 a share move when I covered my first 250 shares, and then as it was upticking, I just closed out my last 50 shares. Could have held some longer, but the important part is now you can kind of see where I entered. So I entered at 347.96 with 300 shares. I covered 250 shares at 346.09 and then 50 shares at 345.60. All right. So why did I take the short on this particular stock? All right, and this is where we'll get into the kind of answer Tesla's 3 question. So if we kind of I'll put this on a 5-minute chart. So if we look back here, right, and actually I'll put my trades back on. Okay, 1 second. Where are we? Hold on. Okay, so you see my short and you see that cover. So I captured a good, almost majority of that move to the downside. All right, so my play was this. I shorted anticipating we were going to break down. If I were to draw a horizontal line across, you'll see that the pre-market support here was like right there. Right? Where these yellow arrows are representing the pre-market support. Right? So let me redo that. Actually, I don't like the way that looks. So today on that short play with Netflix, as you can see, this was the pre-market support. And then it clearly broke down, and you've seen a panic sell all the way down, and that's where I covered my shares. All right, and another way to look at this is like this, and I'll take my trades off for this one. I knew that Netflix was getting a little weak, and the reason I knew Netflix was getting a little weak is because, well, we popped up. We failed 356, we popped down, and instead of squeezing back up, we started rolling, so there was going to be an anticipation of a sell-off. Okay, so that was my trade on Netflix for 564. And while you guys are all here, I uploaded my live trading video of the day. I traded absolute garbage in the beginning of the day, and I was actually down like $2,600 and even $3,000 like 2 times the day, and I was able to finally bounce back to a $1,500 profit. So if you look at the video, that I uploaded today, it looks as if I didn't make any money, and that's because I cut the video out and then actually found a trade right after I cut the video. So here you guys go as the proof, I guess you could say, that I ended my day up $1,588 after I uploaded that video or cut that video off. So booyah to me. The 15-day green streak is alive now. We'll be heading into tomorrow's trading day looking for a 16-day green streak. Okay. Now, that covers that Netflix there. So let me pop back over here. All right. Music Bill Art. The only promotional code we're offering right now for our team will be on the yearly program. So if you would like to join, obviously you can do monthly or yearly. Yearly is the only one we're offering a discount for, and the coupon code is 49 off. So 49 off. It's the number 49 and then of course OFF. And that can be applied at checkout. Let's see. Yeah. So let's see. All right, let's see. I'm just kind of reading some comments here. What do you think of Juan, what do I think about other traders? It actually doesn't really matter to me. That's something you have to decide for yourself. I will not go out of my way to criticize or talk down or anything about any other trading group or trading team, individual. That is something that you will have to decide for yourself, whether that's someone you want to follow, you like what they're doing, and if you like the character, their integrity, do they seem legitimate? That's something to ask yourself. Something I can definitely pride myself on is legitimacy. I am always trying to be as 100% accurate, just and honest with everything it is that I do as far as trading goes. That is why I upload our live trading video every day. So you actually see me clicking to buy, clicking to sell, profits going up, profits going down. I don't do the upload a video of me making $5,000 and then not upload a video for a couple weeks when you could have been losing. So that's why we try to upload the real video every single day. That's what I have to say about that. So do some research, look at reviews, talk to members of those groups, see how they feel about it. Is your best bet. And this will be uploaded to watch later, yes. Are you into real estate? I will be. Right now, real estate market is just way too high. So anybody buying houses or trying to get into the real estate game right now, it's just not a good time. It's like trying to buy a stock when it's been overpumped. It's just a bad idea. So I do have a good chunk of change laying around that's going to be ready to be invested, A, into the stock market when the stock market eventually crashes, and then B, into the housing market when the housing market finally comes down and I can get my hands on a few real estate properties. I will be invested into multiple markets. All right, so moving on, we were going to talk about the pattern day trading rule. So for all of you new traders, the number one most important thing that you can do actually, let me rephrase that. The number one biggest mistake you will make and can make if you're under the pattern day trading rule is this. Remember this rule. If you are a person who is under the pattern day trading rule, this is your number one rule to live by, and do not deviate because you will get kicked in the nuts so freaking hard, okay? If you're under PDT or pattern day trading rule, you must and never take a position that you will not be able to close. Yes, if you're under the pattern day trading rule and you don't have day trades left, you do not take a position that you cannot close that day if worse comes to worse, okay? That's the number one thing you do not do, okay? That's like going on a spaceship. You're in outer space, and you open up the hatch to the spaceship, and you jump out of the spaceship without a line to reel you back in. Once that happens, you're basically shit out of luck, okay? And at that point, anything that happens, and you're screwed, okay? Let's put it into perspective. You're out of day trades. You're pattern day trader, right? Or you can't trade anymore. And you're like, oh, well, I'll take this trade and try and swing it overnight. All right, great idea. So let's swing Apple, right? Let's swing Apple. So you open a position and you can't close it out that same day if something goes against you, so you open up the position. Everything's going good, and then all of a sudden, news breaks. All the new Apple iPhone X's are starting to blow up in your pockets and cause third-degree burns. What do you think is going to happen to the stock? It's going to come crashing down, and you're going to be sitting there basically just getting your head chopped off while this thing just gets annihilated, and you can't do anything about it. Nothing. You are completely helpless. So that's your number one rule. Secondly, just because you're out of day trades does not mean you should start looking for swing trades. Another big mistake traders make all the time when they're newer is when they start or when they're out of their day trades for a week, they then switch gears to, oh, well, now I'll look for positions to hold overnight and make a gain. I'll look for things to start swing trading. Well, let me ask you, are you day trading or are you swing trading? Right? Stick to one or, at least master one of them first before moving into the other, but it's fine to day trade and swing trade, right? It's fine to day trade and swing trade, but don't swing trade just because you can't day trade, right? That right there is already, think about that, whether you want to believe it or not. If you're out of day trades and you start looking at stocks to swing trade or hold overnight because you can't day trade, theoretically, you're becoming a FOMO trader. Whether you even think it or not, if you're out of day trades and now you're starting to look for overnight positions to hold and swing trade, you're getting FOMO, your fear of missing out. You don't want to just sit back and wait till you have new day trades, so you're going to kind of jump around and try and find something to trade. You're already getting fear of missing out. And as we know, FOMO leads to bad trading decisions and usually results in losses, okay? So, two important things. Beginner traders, under PDT, do not take a position that you can't close out. So if you have no more day trades for the week, okay, wait till next week. And secondly, if you're out of day trades, don't use that as an excuse to start jumping around looking for overnight swings or things to swing trade, okay? All right, let's see. What will I be doing when the market crashes? First thing I will be doing when the market crashes is, for one, putting a bunch of money into my individual retirement account that I have managed by a professional financial planner company. Secondly, what I'll be doing is buying every single thing I can get of blue chip stocks. I will be buying Netflix. I will maybe buy, it depends, we'll see, but Netflix, Facebook, Alibaba, Google, Amazon, things of that nature. I will be buying those. When the market crashes, when the market's actually crashing, most of my portfolio as far as retirement will be switched out of stocks and will be going mostly into ETFs and treasury bonds. So as far as when the market's crashing, I will be liquidating majority of my stocks, moving them to ETFs and moving those into some bonds and treasury bonds, okay? And then when the market, I appear, is starting to recover, I'm going to be dumping a bunch of money back into the market. Basically, when everyone's scared shitless and doesn't want to trade stocks anymore, I'm going to be coming in and dumping all my money. Why? Because the market always recovers, right? Always. It never has not. So unless something different happens this time, I'm dumping all my money into the market when we drop next. But then I'll also be shorting every single stock I get my hands on while the market's crashing too. All right. If you're marked as a pattern day trader with one stock broker, you can day trade on another broker. Yes, you can. Okay. All right. So those are some good tips there. Hold on one second. Well, let me move that out of the way. All right. So the next thing I will cover is probably the most important thing for some newer traders, right? So understand this. If you're just starting out, the last thing you should even be considering is making money. Everybody wants to make money. We all know that. But the last thing you should actually be considering is making any money when you first start trading. Let's put it into perspective. How many years does a typical person go to college before they get a job that starts paying them? 4 years. Okay? Long time. So don't expect to come into the market and start making money. So don't get frustrated when you're losing, right? So let's put it this way. How long does somebody practice before they start doing the real thing? Well, if you think about doctors have medical school for a couple years where they're really learning the ropes and practicing. PA students have clinical rotations that usually last for a year, maybe 2 years, depending on the rate of which their program they're entering, right? How long do you do training at your new job? Let me ask that. If some of you guys, whether it's working McDonald's, it's working at Kroger, somewhere retail, doesn't matter. How long have you been working at that job until the point where you felt so comfortable at that job that you knew how to do everything, that you could call yourself the manager? Think about that. I want you guys to think to yourself right now, the current job you're at, from day one, how long did it take you to get to the point where you could 100% for sure say, I could come in, open up shop, and close shop, no questions asked, and run it by myself? I'm looking for the comments. This is not a rhetorical question. This is a literal question. I would like to see some answers. So a year. For Christian, it was a year. And don't sugarcoat yourself and don't cut yourself short. If it was 5 years, it was 5 years. Don't say it was 2 years. Okay, let's see. How many of you guys that work a job, how long did it take you till you felt comfortable that you could run that store or you do your job 100% with no questions asked, ever? 3 months. 3 months exactly. Okay, 4 to 5. For you, it was at least a year, right? So we're getting 4 to 5 months a year, okay? 4 to 5 months to a year. So you should at least be thinking it's 4 to 5 months, half a year to a year before you even start to fully understand what it is the hell you're doing, okay? The only difference between trading and your job is, well, let's say you are a clerk or you're a cashier at the grocery store. At a cashier at a grocery store, not to downput anyone's job, but in reality, your main job is to cash people out. In trading, there could be multiple jobs. Are you going to scalp trade? Are you going to swing trade? Are you going to momentum trade? Are you going to short trade? Are you going to learn to short double tops? Are you going to learn to short pre-market resistances, breakouts, patterns, this pattern, that pattern, 50 EMA, EMA? There are so many different little details and aspects and strategies and helpful tips and patterns and this and that to this game that it is far more complex than any regular job you'll see on the market. So you should anticipate that the learning experience for this game should be longer than what it took for you to learn your job. Not to mention, at your job, who do you have on your side? You have coworkers and you have your manager. Hopefully, some suck, but hopefully they're that got your back. They're helping you, guide you on the right direction. In the trading world, a lot of it is like this. All right, I'm just sitting here in the office by myself. Do you see a manager around? Hey boss, can I take the day off? Can you, hey boss, can you help me figure out how to do this real quick? Because I'm having some trouble. I know it's probably only take 5 minutes. I'd really appreciate your help. You mind giving me a hand? Sure, yeah, let me show you how to do that. There's nobody here, right? There's nobody here but yourself for most to help you learn the game. So when you see stock trading educators and programs like myself, some people look at it as, oh, that's scamish, or that's just a manipulation to make more money. But in reality, who else are you going to depend on if you can't figure it out yourself? Right? And that's another thing. When you're working a job, you have people there to help guide you. This is a very one-to-one, very, business where you don't get that one-to-one help that a lot of people do in the job force. So you guys should anticipate that your learning curve for trading is going to be exponentially harder than most. But at the same time, the reward is far greater than most. Right there. Right? The reward here is far greater than your 9 to 5 for most, but the learning curve is far greater than most. Okay? you should never try to, so here's another thing, right? Don't try and replicate. So like in our live trading room, right? Here's the thing that will happen to a lot of people. We go in the live trading room and people try to take the same trades we take. And that is not always going to work, because if I'm trading a $350 stock like Netflix and I'm taking 300 shares, I'm going to make money. But if you're trading Netflix and you're only doing like 10 shares, you're not going to make the money I'm making. So there's going to be this big misconception, right? What I am recommending people do when they're in our live trading room with us, paper trade. So for all here, all beginners, before you even start using real money, you should be paper trading for at least 1 year. Now, I know that sounds super boring, and it is, because you want to do the real thing. But don't cut yourself short and try and skip corners. This is not the way to do it. This is not the business you want to try and cut corners and speed it up, because it's money on the line, and the reward is great, but you have to take your time doing it. So for the traders in our chat room and live trading room, when they first start joining in, I cannot stress more not to try and follow our trades with real money. Use a paper trading account and then follow our trades. Learn why it is we're trading the way we're trading. Learn why it is we're trading the stock on this day. Paper trade it. Once you can start becoming consistent with paper trading and really understand the setups and what's taking place, then switch to some live money and start following the stocks we're following. But as long as you understand the stocks that we're trading and why we're trading them, at that point you will start to make money. If you blindly come in and even see us doing it live, it is still extremely hard. There are members in our chat room that were with us from day one. Those day one chat room and live trading room members, they can follow our trades pretty well because they've been with us for a year. They know how we trade. We know how quick we can get in and how quick we can get out. And that's another thing, guys, right? Trading is one thing. When you enter a chat room and a live trading room, now you're not only trying to trade, you're trying to watch me and the chat room. It's a whole nother learning aspect you're throwing into a very complex game, right? So think about it like me, right? When people see me trade, they're like, wow, this guy's really good, or he can do these things really well. Don't forget that while I'm trading every day, I am managing a chat room, questions all day long while I'm trading. So not only am I thinking about trading, I'm thinking about all these members' questions, speaking it fluently so they understand what's going on. So I am doing one job, I'm doing two jobs at the same time. So when you come into like a chat room like ours or anybody's and you're trying to trade at the same time while watching a chat room, you are now taking two jobs into one. And that in itself is a whole nother workload. Right? So when you come into our course in our trading room, the best thing you can do is hang out for a while, paper trade with us until you really get the full experience. You know how to navigate the chat room, understand the live trading room as well. Thank you, Andrew. I love you too, boy. All right. Let's see. I am still green. I did finish the day green. It is 15 days in a row. My video I upload is basically going to look like I'm some type of scam artist saying that I was up 1,500 profit when I didn't end the day 1,500 profit, but we did. And I mean, if you want to see it again, here you go. Boom, boom. There it is. 1,588 on the day. With commission, it was actually more like 1,350 or so. But anywho. So now that we just covered the importance of paper trading, to recap, all new traders should be paper trading for like upwards of a year, right? Definitely be trading for upwards of close to a year before you really start to jump into it, okay? So with that being said, we have basically covered all the things that I really was aiming on or hoping to touch on in today's stream. Do you guys have any other questions for me, as long as they're not too complex, that I can help you guys kind of ask or answer, shall I say? All right, good stuff. So unless you guys have any other questions, I think this would be a good time to end this current stream, but I will give it a few more seconds just to see if some questions start coming through. How to join the live chat room? Jing, You can join our live chat room by going to the first link in the description of this video. It is called Boiler Room Trading. From there, you can sign up to join our trading course. So yeah, for any of you guys tuning in or anybody that comes through watching this video, if you do want to join into our trading course, it's the first link in the description below. I also recommend joining our free chat room, which is also linked in the description of this video. That way you can talk to our current premium paid members, and they can give you feedback on how well our chat room does and their perspective on the whole course, live trading room, and all the other bells and whistles that come with our program. Okay. A computer. A computer is all that is necessary to join in live with us every day. I don't trade futures, and I don't know enough about futures to really touch on that, so I won't even go there. That's not my expertise. A smart man once told me, I don't want to say once because he's still alive, so a smart man told me to always stay in your lane. Remember that too, guys. Stay in your lane. Whatever it is you're doing, stay in your lane, okay? Because if you hop outside of your lane, you're going to end up getting crushed, right? It's probably not a wise idea to take your car and drive it on the other side of the road and get out of your lane, because chances are you're going to get smoked, okay? So that's another thing. Stay in your lane. Futures, I don't know. I'm not going to tell you I know them, and I'm not going to give you any advice because I would just be doing an unjust thing for you, and I wouldn't really be helping anybody out there. So I don't know about futures. I will not touch on those. So Al Brown, 25% of your capital, right? So let's say you had an account that was, let's just say, worth $1,000. 25% of capital would be, so if you had an account worth $1,000, and the rule of thumb is to only risk, it's to only risk or put up 25% of your overall capital in any given trade. Meaning if you have a $1,000 account, to only invest 25% of your overall capital, which means you would only be trading with $250 per trade. For me, I only use mental stops. I don't use hard stops. In terms of the way I trade, I don't use a hard stop. Everything is mental, which for a lot of people is hard to do because they just can't get it around their head to get out of a trade when it's going against them. So that's another thing, right? So as far as like Tesla goes, here's another thing, guys. When you're dealing with a company like Tesla, right, you have to understand that it's not only the company you're investing in, but it's the person you're investing in. When investing in Tesla, you're not investing in Tesla. You're investing in Elon Musk, the individual and the person. That is who you're really investing in alongside of the company, right? Apple. When investing in Apple, you're investing in Apple and Steve Jobs. With Amazon, you're investing in Amazon and Jeff Bezos, right? Every one of those guys, Steve Jobs was laid off from Apple, right? He laid off from Apple and they ended up coming back to Apple. They needed him. Jeff Bezos at one point, everybody thought Jeff Bezos was nuts and he had no clue what he was doing. And now look at his stock, right? So when you're looking at companies, you have to look at it as a whole. Who you're not only investing in a company, but you're investing in the individual himself. Elon Musk is a pretty intelligent dude and he does some really dumb things. Everybody does. But in terms of Tesla, where it's at right now, in no way, shape, or form is it a good investment, right? It's not, to me, it's not a good investment. It's very fun to trade, actively day trading, but as far as an investment, is absolute dog shit, okay? Because there is nothing about Tesla right now that screams we are unique and we have positive cash flow and we can actually do this. Everything is still speculation. Speculation can lead to great returns, but also speculation can lead to great losses, right? So that too, just understand who you're investing in. I have faith in Elon as a smart individual that can make the right decisions. But now, do I think he can take Tesla to where it needs to be? Not really right now. I don't. He's shown me no signs of anything that shows me he can do it. Why? I mean, have you seen have you seen their financial reports? Every single report is we basically suck. We're negative. But I'll promise you this. He promises guess what happens next quarter? Promises fail. Promises fail. Promises fail. Investors just burning through cash, burn through cash, burn through cash, right? So no, I don't at this point. How will the world end? I think the most logical way the world will end at our current pace is by humans destroying it by technology. If we were to stop progressing right now in terms of technology, the world would be fine. Like, we don't need any more than we already have right now. Everything we have right now is 100% sufficient enough to do everything we need, right? You can travel the world and you can get across the world in different continents in 12 hours, right? 12 hours. We can ship goods from country to country in minimal time. You can get a message from a friend instantly. You can get money to your account instantly. You can drive a car like that. You can ride a bike. I mean, you get the whole world at your fingertips on the internet. We are 100% okay where we're at. But we are going to progress, and we are going to be what kills us, okay? Definitely. Probably by computers. Computers will probably become so intelligent that they're going to start writing their own programs and algorithms to the point where they don't need humans, and then they'll just basically kill us all. I honestly foresee our future being iRobot or Terminator. That's my outlook. So, other than that, ladies and gentlemen, I hope you liked the video. That's all I have for today. Do make sure to tune into our live stream every day, right around 8:30 in the morning for a pre-market live stream, and then any other videos that we do come up with. So I do appreciate you guys tuning in. This will be recorded and uploaded to YouTube. So other than that, guys, take care and have a great day, and make sure to always stay green.